Hey, this is Brett Fogel from Moonstream Crypto, and I want to talk to you today about an often overlooked strategy in trading that is so hard for traders to take stop losses and take small losses when prices are dumping. And the reason for that is oftentimes our ego gets in the way and we don't want to admit that we made a mistake. But in reality, it's so important that you at least take small losses because it's sometimes hard to take that bigger loss, which turns into a bigger and deeper loss. Another big reason for taking small losses is to have some powder dry so that you can buy lower dollar cost average and often catch a bounce, especially in big drawdown days and capitulation days like today, which was February 2nd, where we saw a large drawdown, a big capitulation, a cascade of stop losses and liquidations. Over $2 billion in liquidations happened today. But what I was teaching people on the last few days, we were telling people to get out of the markets and take those small losses in altcoins and Bitcoin so that we could buy back lower. So case in point, and one example from today, as we could see, there were buy orders around 175, which was way below where price was trading at. And there was a nice parallel trading channel that Sol had been selling off to, and right at the bottom of that channel is a price of 200. And but it didn't seem like it would go lower than that. We had suggested people taking some losses. The week before, 2 weeks ago, Solana hit 300 on the big pump when the Trump coin came out and immediately sold off. So we were recommending taking profits up with those levels. But the point is that I put out a buy alert today to put buy limit orders at between $175 and $200 Solana. So prices people panicked, sold, came down and hit exactly at 175, and the people that were able to buy that, who sold and took some partial losses higher, they had that capital available to put in the limit buy orders and get filled, and before the end of the day it bounced back to 200. Some of my best trades, and also in Solana, have been doing that and putting buy limit orders in these green boxes, these buy order blocks. We've created an indicator that visualizes where the buy limit orders are on the order books. And it's been highly effective, so we can see these areas where buyers are lined up. I've nearly doubled my Solana in my IRA by doing that over the last 6 months, turning 40 Sol into 90, actually 50 Sol into 90 in my IRA. And of course, I'm heavily invested in another account. Point is, and the lesson here is, even though it's hard to take losses, and the easy thing to do is kind of put your head in the sand and say, hey, I'm just going to ride this out. Or let's be honest, what a lot of people do will make a distraction, go do something else, not wanting to face up to the fact that they are in losses. Sometimes it's painful to look at, and the many traders turn short-term trades and become long-term investors when things get too painful. So another reason for taking a partial loss is it's more palatable to get out in stages. Amateurs go all in and go all out. Professionals go into a trade, build a position, and leg out. So I highly recommend doing that for these reasons. A, you can prevent much bigger losses by sort of holding on, hoping for the best. Hopium gets more traders wrecked than anything else. So even taking 25% or 30% of that to trade off and eat a smaller loss, if for no other reason, to have that cash available to buy back lower, especially if it looks like it's going to be cascading and further down days. So today is Sunday. We had kind of a bloody day on Saturday yesterday, continued on through today, and likely will continue into tomorrow, Monday, when the stock market opens and the derivatives markets open, options and futures. So probably going to see some more pullbacks. But although Asia is already open, we've kind of seen the worst of that. Point of that is, had you held on to your Solana and not taken partial losses and rode it all the way down, oftentimes people will panic sell at the bottom when those losses get so big they just can't take it. And so by taking losses in small increments on the way down, again, you can have some cash available to buy that bottom when it finally bounces, but also it just makes it easier mentally, and it's good practice to build those neural pathways. It's a good habit to be in, something I teach all of my students at Moonstream. So another quick one I'll just give you is parallel channels. We use those a lot, And I mentioned it a minute ago. One of the simplest ways to trade in a range. Trend lines are good, but it's amazing how when you draw the parallel trend channels, these things can the price action will typically go to the top and bottom a few times. So the earlier you can identify a parallel trend channel, and all you need is 2 data points on the tops or the bottoms, that becomes a tradable range. And some of our best trades have come by doing these. I prefer simple TA. I've been trading for 25 years, and I don't like to get into the complicated things. You don't need fancy Elliott waves and fancy Fibonacci circles. So you guys know what I'm talking about. Probably have seen some people's charts, which look like spaghetti and make sure eyeballs hurt. So it's the simple things that really are effective. Exponential moving averages, parallel trend channels, trend lines. Of course, we also have our custom pro signals we've developed. I'm not here to talk about that, really here just to deliver value and encouraging you guys to practice good trading discipline and risk management, because the worst thing to do is have a big position that turns against you and not start taking smaller losses, getting de-risking that position. Because if we do see a big capitulation and sell-off day and you haven't taken any losses, not only can you not buy back lower in dollar cost average, which essentially it moves your break-even point higher up to that midpoint. So if you'd bought Solana at $250 and you had a big position and you rode it all the way down to 175, and worst case sold it there because that was where it bounced, but you would have to get back to 250 to break even. Whereas if you'd sold 25 or 50% of your position, taken a small loss, but had bought back on the lower on the bounce, you would have erased most of your losses, even though it only came back up to 200 so far. So if you like this lesson, we're going to start doing more of these mini trainings on how to become a better trader. Go ahead and hit a like button below. Put a comment below if you'd like to have me do more videos on things like this and other tips for how to become a better crypto investor and crypto trader. So that's my trading lesson for today. Again, Brett Vogel from Moonstream Crypto. You can learn more about us over at moonstream.io. Take care.